Hello, my name is Jeff White, and we'd like to welcome you to our third quarter 2025 market outlook. Some of you joining us may be our clients and others are not. Whatever the case may be, we hope you see value in the market viewpoints from our advisors here at Capital Strategies Group. As certified financial planner practitioners, we take an unbiased fiduciary approach to the way we help our clients. We're constantly keeping an eye on market movements and staying updated through various resources. We love to share our insights with you, but it's important to note that just because we're discussing these topics doesn't necessarily mean adjustments are warranted in your portfolio. News headlines can sometimes create a sense of urgency to take action, but it's important to recognize that not every situation necessitates immediate action or intervention. Despite ongoing tariff negotiations, the stock market is showing some resilience, with most major indices in positive territory for the year. Successful trade deals with several nations have eased concerns, boosting investor confidence. The White House has extended the pause on reciprocal tariffs until August 1st, allowing more time for trade negotiations with additional countries that have yet to make deals. Economic fundamentals are continuing in a positive direction despite initial expectations of tariff impacts. The labor market remains strong, with June's data showing strong job growth and stable employment. Inflation is stabilizing, with wage growth outpacing price increases, fostering optimism for sustained economic momentum. Although there is still some uncertainty, overall, investors seem to be absorbing tariff news very well. Analysts generally expect the Federal Reserve to cut interest rates twice by the end of 2025. As we continue to watch these key indicators to assess the potential impact on the market, we believe the second half of 2025 may include a few pit stops along the way for the stock market and perhaps some short periods of volatility due to geopolitical uncertainty, but we otherwise expect the markets to proceed steadily for the remainder of the year. The One Big Beautiful Bill Act was signed into law on July 4th, 2025. This bill solidifies the 2017 Tax Cuts and Jobs Act by making its tax reductions permanent, preventing tax rate increases scheduled for the end of 2025. The bill contains many provisions. However, some of the key provisions include a permanent increase in the child tax credit and an additional $6,000 tax deduction for seniors over 65. Additional temporary provisions include an increase to the SALT or state and local tax deduction and no taxes on tips up to $25,000 per year or overtime up to $12,500 per year. There is also a $10,000 car loan interest deduction for individuals who purchase automobiles whose final assembly took place in the U.S. For more information on these tax benefits, please reach out to us or see your tax advisor. We believe diversification remains the best approach to confronting market volatility, regardless of what might be causing short-term market moves. We've seen this strategy prove true this year as the international stock market has surged ahead of the U.S. markets during the first half of 2025. We have also seen small company stocks gaining momentum in recent months. Markets reprice quickly, and maintaining a diversified portfolio helps you take advantage of growth opportunities across various asset classes. For our clients, we have your portfolio carefully designed to optimize stability and growth. We appreciate you taking time to join us for this third quarter economic and market outlook. Take care and thank you for watching.